Workers on payroll are considered optimal by these taxing authorities. Why? Because they're able to tax right now. Oops, kind of went ahead of ourselves. We're able to tax and get the taxes taken off the top of payroll, and there's a collection mechanism. They can be controlled, grouped, audited. Employers are the favored methodology of these taxing entities because they're easily controlled as opposed to contractor relationships that aren't. One example, sometimes statutorily there are changes which eliminate the ability to have contractors. One example was in the Tax Act of 1986. There was a section 1706 that specifically and statutorily barred computer consultants from being engaged as independent contractors. I had several clients that were in that industry at the time, and overnight we had to convert over 200 contractors to employees, and it was really quite an experience. So we'll share some of those war stories as we go on. Dan, would you like to take us through the legal developments?
Sure. In terms of legal developments, there are a number of legal standards that have grown up over time, both in the federal and the state law, and it's really presented a morass of rules, of considerations, and what's interesting is the agencies don't always agree with each other as to what constitutes employment in the traditional sense or otherwise. So just to run through a few, the Internal Revenue Service established what they call the 20-factor test back in 1986. And the 20-factor test was a list of things that the service had looked at over time and decided were key elements in determining whether or not someone who performs services should be treated and deemed to be an employee or not. And the types of factors were things like, who gave instructions to the worker, who conducted training, whether the services that the worker performed were integrated into the business of the entity, and so forth. But the real essential focus of the 20-factor test is who is directing and controlling the work. And the IRS made clear that it's not a majority test. If you meet more than half, then you're automatically an employee. What it said is these are just factors that we consider, and we're really looking for direction and control. And no one single factor is determinative. Separate from that, under the common law, and using obviously the old common law language of master and servant, the courts developed their definition of what it meant when a worker was an employee, what indicia had to be present for that person to be deemed to be an employee of the master. Under the Fair Labor Standards Act, which is an area of great concern, because in a lot of these cases the claims here are that you didn't treat people properly and pay them wages properly. There's been a test developed by the Department of Labor. And then of kind of, I won't say more concern, but certainly of high concern in our practice are the patchwork of state laws that have developed. California has developed a test which they call the 11-factor test that looks at things like are the services being performed distinct from that of the principal or the entity that the work's being performed for? Is it part of the regular business? Who's supplying the tools? Who's supplying the materials? What kind of occupation is it? Is there a chance for profit and loss by the person performing services? So California has a kind of a more extensive 11-factor test. Some other states, and the one I'm thinking of in particular is the state I'm in, Massachusetts, has developed what's called sometimes an ABC test. And there are only 3 factors. Under that 3-part test, there's a presumption that the worker is an employee unless the entity can show 3 different things. First, that it is not directing and controlling the work. Second, that the work being performed is outside the usual scope of that entity's business. So the example that they give is if you bring a drywall contractor in to spiff up your offices and you're an accounting firm, that's outside your business. If you bring in a retired IRS agent to help you prepare tax returns during the rush, that's not. And then the third prong is that the person who's performing services has an independently established business. And we've had real difficulty here classifying almost anyone as something other than an employee under that state law. There's also a concept I wanted to introduce called joint employment, where more than one employer or more than one entity can be the employer of a particular person. And the courts and these agencies will look at a number of factors to decide when someone is acting as a joint employer based on the fact that more than one entity is exercising direction and control over the person performing services.
So Dan, just to echo that, your PEO example, as we were defining various categories of employment earlier, which would be
Right.
PEO stands for Professional Employer Organization. That's an example of a co-employment relationship where each entity has some elements of the employment factors.
Right. What's sometimes nice about a PEO is that at least there's an employer standing up saying, I am the employer, and it's the leasing entity. There still can be risks using leased employees, again, because of co-employment, where an agency will come in and say that's fine, that you've agreed that the worker is the employee of the leasing company, but the client entity is really directing and controlling the work. So therefore, we're going to hold you both responsible for some of these things pertaining to employment, the employment relationship. Let's take a quick look at some of the federal tests. In addition to the 20-factor test, the IRS has really kind of looks at three big prongs in terms of determining whether someone who performs services is an employee. And the first is behavioral control. And again, that's direction and control, and it's things like who's giving instructions day to day about what the person performs. Is there an order or sequence for the work being set? Are there set hours of work that the person has to come in at a certain time and leaves at a certain time, and so forth? Another concept, and again you see these concepts sprinkled through other various tests, is who has financial control. And that means things like, does the person performing services have the opportunity for profit or loss? Are they coming in to do an assignment on a flat fee basis using their own materials and tools? Can they achieve a profit, or not? Have they made a significant investment in the business, their own business, such that they have financial control? And then third, the IRS will look at the type of understanding that exists between the parties. Although at times, and it's clear in most of these tests, the mere fact that you have a contract that says that someone's an independent contractor will not necessarily make that so.
But on the flip side of that,
yep.
If I could, Dan,
Sure.
In California, for example, if you don't have a written contract with your contractors,
Right.
you are dead in the water. I mean, they will not even entertain the concept that the individual worker was a contractor. So the way you write these contracts is really important, and we'll be talking about this later, because there are ways of addressing contractor relationships that, believe it or not, can meet some of these stringent tests.
Right.